Okay, well, we're live. I haven't seemed to sort this video. Hello. Hold up 1 second. There we go. Seems that we are at quite an interesting angle. Let's make this bigger and play with the cropping bit. Maybe move here and then crop there. Perfect. All right. Where is the best place to put a bit of a camera? Let's make sure we're all fresh. Now, hold up. Seems that we are live, but I'm just setting up the Bloomberg terminal on my other device, just so I can have some backup research. If any companies we haven't read about seem to pop up. Got one of these diffusers. Feels good, feels good. All right. Well, I'm just going to post on Twitter. That's what I should be doing. You get the right one. All right. And I'll go on over to it on another screen. I have two screens right now, so don't be worried. But anyways, welcome back everybody. If you're new, my name's Ryan Kia, and I am part of Quantium Research. I also work as head of finance for a beautiful company by the name of KWG Global. And today, we're not talking about any of that stuff. Today we're focusing just on some financial data, some technical analysis on a couple big names, the likes of Twitter, who just hit their earnings quite recently. Let's see, what are people saying? All right. Let me put this thing here. We're just going to look around. If there's any company you want us to look at as well, give me a name. I love some new ideas. And hopefully we can get some conversation going as well. I think I need to close that. That should be all right. Okay. I hope the audio is coming well, because we haven't streamed in quite a while. I'm just going to quote the tweet I put out earlier. Now we should be live. Okay. I'm live now. Very chilled stream is the intention. Whether it means a couple charts we can look at. Actually, I need to delete that tweet and redo it. Also, when it comes to Twitter, a lot of people are talking about whether it's a good company or not, but there's the earnings that we have to focus on too, that I have access to on this side in front of me. So if I end up looking to the right side, don't worry. I'm just very, very indulged with this Bloomberg terminal. I just set it up on my laptop so I can get their quarterly earnings. Last one, revenue of 1.036 billion. That seems right. Net income, 68 million. Seems right. Not that good of a quarter. Is probably what everybody's talking about right now. So Twitter shares, look at that gap down, and they couldn't seem to hold any ground. You'd think first point of interest really, yeah, around that 50 to 52 kind of 50 area. That's probably where the price action's heading towards. Those are fundamentals though. I do like the company. There are a couple of details we can dive into later. Just want to quote this tweet properly. Let me quote it. I'm live. Oh, I'm live on TradingView. Right. All right. I think it was the Warren Buffett thingy. Oh, King Cairo. Sorry, I wasn't paying attention to the chat. What I'm going to do is I'm going to put the chat on this screen. And I'll look at Intel shortly. I want to kind of think about their financials as well. Let's look at the whole story, not just one thing. That'd be cool. Let me mute this. All right. Is my audio coming all right for everyone who's on the chat? Intel, do you think it will hit 60 this week? Let's see. Do they have earnings? Is anything coming up for them? Oh no, they've just had earnings. I wouldn't be too confident. Normally when you have such a breakaway gap from the technical side, it's not positive for its share price. So probably, if anything, it's probably more likely to tend towards 54, 53, 54 than 60. In terms of everything else, yep, nothing's too oversold on the RSI front. Momentum doesn't look great on the MACD end either. Yeah, all right. Well, I'm probably, it's not the kind of trade I like, neutral risk reward, and there's not really a high probability associated. I have to run it through my model first, but just from one look, I don't really like it. I'd rather be short than long, but in this market, you don't like to be short most things unless you're doing a trade. But in terms of their financials, let's have a look. Let's use this beautiful $25,000 a year platform we have in front of us that we can't show, unfortunately, because that's part of the agreement. INTC, let's see. Expected to do lower sales for 2021. Lower profits, not so much. 19.5 billion. Net income down to 18.95 billion. That's a drop. And you haven't seen a drop for a while, have you? No, from 2019 to 2020, each year has been relatively strong, but from this year's expectation, things are going to slow down. Intel's falling behind. Intel released, I think, the i7, is it? One of their chips that AMD released back in 2020. Intel said they're not going to release up until like 2021. So I'd be very, very cautious about holding Intel over the likes of its competitors. It seems to be one that is slow to adapt and has gotten to the point where its size is limiting it from any further growth. AMD has no problems like that, but these guys do. I hear you very well. I hope I am right here. Can you tell me where you see the Euro US dollar on Monday or Tuesday? Hey, Hendrik, I don't follow that kind of stuff that much. I'm not a FX trader or any of that stuff, but from the charts of a simple look, of any thoughts? My immediate point of interest is probably this zone, 1.19859 to around 1.19098, which isn't that far off now, but that's probably where I think you've got a zone of interest. But let's focus back on some stocks. What's the catalyst on 4:30? Are you talking about earnings, I'm assuming? INTC. Let's see. No, that's 22nd. So I'm not sure about the 4th or the 30th. What's the catalyst you're talking about, King Cairo? Let's have a look. I could find that out from the terminal. Potentially. Oh, let's look at earnings multiples as well. Because Intel, it's that kind of company where it's quite easy to figure out whether you can see it's cheap in terms of PEs or expensive, because it's not heavy in terms of the growth side. It's more a value stock than anything. In terms of price to earnings ratio, let's see. 2018 average 17.56, 2019 11.68, 2020 average 12.58. Currently it's 13. So it's roughly towards the lower end, lower mid-range of its historical average. Over the next couple of years, because profitability is expected to fall and revenue isn't expected to increase in the next year as well, Intel kind of seems to be the same. A business that's going nowhere in 2 years is something you'd rather buy, if you liked, at a serious premium. But at the current point in time, you're paying the same price you could get in a year or another year's time, 2 years' time. And for those folks who are familiar with discounted cash flow models, you'd rather wait and buy it then if it's not going to grow. A business that fails to grow is essentially something that sees huge institutional outflows. And actually, I could probably check that by looking at some information about who owns them, who are the big dogs, who's selling out. Let's see. In terms of the most recent moves, what I'd like to do is probably get the biggest shareholders, which I'll do. Yeah, so all of the largest shareholders have been dumping. Some of these are not shareholders. What am I talking about? These are ETFs. Let's get the shareholders. Yeah, okay. One, Norges Bank, 42 million shares now, but they sold 6.5 million recently. Who else do we have? Dimensional Fund Advisors switch from 38 million shares, well, 41 million shares to 38 million. So they sell off, what are we talking? Roughly 10% of that position. So it's only 0.1%, but they're still selling. I can't see many huge buyers unless it's ETF allocation. Nothing stands out. I don't really like Intel in that regard. Yes, it's cheap versus AMD, but are any of them cheap is a question you should be asking yourself. Let me put this over here. Left the window open too long and now it's starting to get cold in here. What else is there going on? Couple of names I wanted to look at. Let me look at what my folks of interest are. Got Barclays Bank. Barclays Bank breaking down, momentum's changed. My thoughts are if it can't hold here, then it's probably going to lead the pack lower. That includes the likes of Standard Chartered. We had a trade in Standard Chartered about a week ago. I bought in at £4.93 a share. Within 24 hours, we sold out at 517.6. That video just went up. It's on our YouTube channel. But there were much higher targets, just unfortunately, in the near term, it might have to move down one last time before. We're not sure. I could be wrong. The fact that it held into close could mean that it's just gearing up for another move up. This is kind of classic hold, then do another leg up. But we had a trade anyways. We made about £196. Take away the fees, £176. Decent for a day's work. And we had other stuff going on, so that was nice. Twitter of interest. I don't have a clear price target, but generally when this thing gets seriously oversold, there is some form of reversal. That's what I tend to think about it. In terms of the trend, this near-term kind of secondary trend rather than the overall primary trend. Secondary trend could be tested. That is around 200-day moving average territory. I assume wander around here, test that, then reverse. But about the financials of the company, that's what stirs it in the right direction. I think in the long run, Twitter is worth probably 3 or 4 times more than it is now. What is it? $44 billion valuation. I like their revenue growth. I like their profitability growth. And some of the important financials of net cash flow as well. That was an important figure. Let's see if we can find the number there. In terms of free cash flow, $209 million just for the first quarter of 2021. It's a good point for me. Revenue was not as strong as the fourth quarter 2020. Advertising spend is down, but per advertiser it's up. So I guess a lot of ones that were doing it in small size have gone off. That kind of makes you think that Twitter is where the institutions can advertise, but will the small businesses advertise on there too? I don't know. I can't guarantee that at all. But it would be interesting. Hendrik says Jumia. Jumia is a great one. Let's look at Jumia. And if you guys haven't already, make sure you follow us on TradingView. We're kind of active every once in a while. And also, there's a couple of announcements coming regarding our site. We're going to be releasing a trade idea stock report once every week. It should start from not this week, but the next, hopefully. And that will have actionable trade ideas with price targets. You know, if this breaks above here, 50% target higher or whatever. Exact details will be there, all the charts, and we'll release them once every week. That will have small caps in the UK, small caps in the US, mid and large caps in the UK and the US as well. So we've got stuff for both our US and UK audiences. We've switched from the crypto, forex, and index reports to simply focus on stocks, because that is where most of the juice is at now, on the energy. So we're going to be doing that. And the quantitative research team is just working on the marketing stuff, which will be developed, and then we'll do that. So there'll be a lot of actionable ideas. These chill streams will probably come to an end. I'll probably be less active on Twitter in terms of trade ideas, more in terms of overall market commentary. But for now, we're just looking at some charts. So in terms of Jumia, well, if it can hold above this point, 28 or so, let's just put a rough range, 27. If 27 holds, then we're in for another aggressive bounce, in my opinion. But we shall have to see. Momentum looks all right. Things are relatively healthy. I can't see anything bad. Declining volume, declining price, but slowing down. Let's see. Okay. Well, we're going to stick to these ranges here. If you can hold 27, nice. First target would be 31.70. Hold 31.70 and break, then targets 40.21. So if we can get back above 31.75 ASAP, there's some room to add on to that strength. Target 40.21 and higher. And 43 is this big barrier to break. If we can break above 43 on Jumia, then it's probably a test back to all-time highs, around 70. Nice. What about the downside targets? Well, there's a little bit of a tight zone between 24.60 and 27.49. If that fails, it's straight down to 22. Well, really, the tight zones between 27.49 and 28.21. Fail 27.41 and you're down to 24.60. Fail 24.60, down to 22.75. These are kind of rough points of guidance. I traded Jumia quite a while back. We went long on this break here. And look, we sold way too early. I think I sold within the day after. We sold at, I think, 24 something, 24.60. Maybe even lower, maybe 20, just 24, I don't remember. The video's on YouTube if you want to check it out on Quantum Research. I can pull that up. Hold up. Making £402.61 on Jumia shares. Yeah. So this was when we had shorter hair. We enter on that break. Classic. What are we getting at? 2018. Boom. You can see it breaking out in action. And we get in on a clear breakout. I mean, maybe $1 above where we could have got in at. And then look, boom. Fast forward to the next day. Well, it's still breaking out. Boom. Here it is. Let's catch the point.
We opened at 20. I'll update this probably throughout the next week or so. I reckon this could take a couple of days being perfect.
Good throwbacks.
But we're giving 1 to 2 weeks max, which is a nice swing trade. Whenever it's finished, the video will be up. So you're probably seeing this because it's finished now. This is now
Boom.
what things are looking like. We opened at $20.18 yesterday.
What an entry.
We could have we didn't. And you
Where did we get out at? 24.42. Wow, so it was breaking out whilst we were recording that video. £412 net. What a great trade, eh? But the point is, we'd look for a similar move like that before we'd have any interest. At the moment, I don't have too much interest on these guys, but the same kind of move. It's not holding. I'm not interested. But those are the levels I would use if I'd act on them anyways. Oh, appreciate you guys sending these coins. Don't know what they do, but thank you so much. Pick up yourself, man. What else is going on? OCGN, CCIV. Yeah, let's look at it. OCGN. Ocugen Inc. In fact, whilst we're here, I'll give you some financials as well about OCGN. Let me hit the research in. Let's see, Ocugen. Ocugen looks pretty healthy. Can I try and see more info? Everything looks relatively good with these guys. Yeah. I mean, clear that, what is it, 1336. There's a little bit of spike in territory. It's a tough one. Is there even enough information about these guys? Perfect. Well, we've got that 1674 that comes into target. Recent highs, nope. There's nothing wrong here. The only problem is when the RSI gets super overbought, like it does with this kind of thing, it's a spiker. It spikes, reverses kind of thing. Unless it consolidates in a move, which it's doing now, it normally falls back down. Generally, these shares tend towards that 144 EMA, which here is kind of being tested. 100-day moving average as well, 591. So I wouldn't hold this for more than a couple months. The risk is much more than 50% on the downside. In terms of upside, I target around 1694, I think that was. But the range comes in at between 1577 and those highs at 1888. 1674 or so is probably where I'd target. Momentum's good. RSI over 70 isn't bad necessarily. In fact, sometimes when the RSI is over 70, it means you're in an uptrend. If the price consolidates, which it's doing now, that's amazing. If you simply drew one trend line from that point to another and let it reduce, you buy on the break. Let's just do something random like that, right? Clear, decent risk reward here. And zoom super tightly into there. If you buy on the break of this, which essentially means if you buy at, say, $14, you're probably targeting the 18 off that move. So if it can hold, it looks like it will. I mean, look, we've established a new range around 70 on the RSI. Look how it went around 70, just below, but closed above. I like it to go higher, Ocugen. I don't know anything about the company, but we're going to look now. Get some financials in here too. Well, no revenue in 2020, but 2021 expected to do 583 million and a 93.6% net profit margin. I don't know what that is. I don't know what these guys do, but if that is the case, they'd be trading at roughly a 5 times price to earnings ratio, maybe even less. So the business has changed entirely. I don't know what that is. I'm going to maybe see if I can find quarters of revenue growth. Maybe it's a merger. There is no information. No, they're just expected to do 156 million this quarter. Coming in net 52 million. Before, they never had any of this. So I wonder, if I go back to 2019, for example. Yeah, okay. So the business must have changed operations. But it looks healthy for a breakout. COVID related. Oh, interesting. Well, if it's above 14, I'd probably be buying towards that 1871 target. But you got these old ones here that range between what, 74 and 1884. That's where I'd be interested. If it fails, breaks down, I'd target around $6 a share, maybe $6.50. So the biggest risk reward is on the downside, but it seems like it's geared towards a move up. So that's what I think about it. All right. Appreciate everybody following us on Twitter. It's very nice of you. Seems like our following has been rising as of recent. We're up to 1,172 followers. Very cool. It was like yesterday where we had 1,000. It's cool interacting with so many nice people on Twitter. It's a shame we all can't have genuine conversations though as regularly on things like Twitter Spaces and all that, because it's very hard to know what someone's saying sometimes because of miscommunication, all that. But anyways, yeah, Ocugen's there. We had another recommendation. Penny stock from the UK. Oh, I know Powerhouse Energy. I'll tell you what, I met one of their old CEOs back where there was a girl and a guy. The guy was the CEO and the girl was one of the research people in like a something gas they were doing. Some, I don't remember. I know Powerhouse Energy. In fact, I held their shares when they did a placing once, so that's why I'm quite familiar. Well, let's see. That move recently. Wow. Wow, wait. First of all, they're worth 205 million. I had a placing share offering. Oh my gosh. And I thought 20 million was a lot back when I was there. Or was it 40 million or something? I don't remember. Wow. Well, in terms of their shares, if they break below well, actually these lows in here, 480, it's going to look ugly. Break below 480, first target's 455, next one 364 or so, or 358, and then boom, 278. So really, if you're breaking down below 490, targets are all the way down to 278. But it seems like it's trying to hold. Look at this. 2 attempts at this 200-day smooth moving average. It's tried to hold. And if it does hold and it can break above 620 real fast, it's targeting around 670. If it can break above that 670, well, actually, here's the point. If it can break above 710, the target is as high as 950 and those recent highs at 1139. Normally, though, with a stock like Powerhouse Energy, you see them place after such rapid movement up. I don't know the truth in any recent headlines, but if you've been following their financials, let me know if they've done a placing anywhere between 1137 and what they are now, 50% lower. Because if they didn't, first of all, it's interesting. It's kind of dumb management, I'd say, because you should calm the market from the beginning, not let this kind of move happen over, what are we talking, 4 months? I'd be very surprised. Let's see. Lucid, I'm not sure. I haven't been following them at all either. Wait, what is the thingy for Lucid? Is Lucid just CCIV? I think I made a mistake. Yeah. Well, didn't they do that deal at like, what was it, 60, 70, that only valued them at $11 a share? Or something, $17. I don't know. Technical side doesn't look great. Doesn't look pretty at all. Fall below 21, which it's a little bit above now. And we're moving back to visit those previous lows. First target 1881, as low as this little point here, 1751. CCIV merger. All right, I see. That makes more sense. I don't really like these, what do they call them, SPACs. It's difficult to value them because they're totally new businesses. You can't look back on their history for many of them. Kind of scares me a bit. It lets them get a lot of things under the rug. Alrighty. If anyone has anything else you want us to look at, we can look at that as well too. We're just chilling. This is a totally chilled session. I was going to look at a couple of stocks that actually I hold, but I haven't really been tweeting about too much. CubeSmart, it's a storage company. Wow. Well, there are some shares I hold that I don't even think about regularly. Reason why is if I do, on this kind of rise, you'd be selling, wouldn't you? If you look at the daily for this stock, it's essentially one of my favorite plays to go against, well, go pro inflation happening. Look at that. Oof. We are doing good on this one. But it's one of those things that, like, me looking now, I've been in for a couple of months, so if I sell out, I think about the monetary gain and all that, so I don't want to look at it too much. But I did a review of some of the guys in the space. Let's have a look. I make some notes on my laptop. Let's see. Just gotta find which one. I make too many notes on my laptop. Okay. So the main competitors in the storage space include 4 other companies other than CubeSmart. You got Extra Space Storage, which I'm going to make a 5 chart comparison. Maybe that would be helpful. Yeah. which one is the most appropriate way. Yeah. So we're going to put CubeSmart up here, and we're going to put Viacom CBS, a nice one. Extra space storage. These are the guys in the US listed storage space world. I have private notes that I normally make for the company, but we'll put these out for today. We've got public storage, which is PSA, life storage, and national storage. I don't think I got the best one. We've got to double check. The general trend is all of these are doing really well. They can charge higher prices in times of inflation because they can simply just say it's inflation's fault. But there's not much regulation in this kind of area because it's not a necessity, is my point. So let's see how these big guys have been doing. Are they all on the same scale? March, April, May. March, April, May. These guys, we can put 2021. These guys. These guys. Okay. Well, generally, everyone's been doing well, but the only one I hold is CubeSmart at the moment. Let's look at some valuation metrics. So, extra space storage is roughly 18 billion US dollars. That was about a couple weeks back when I checked. So, what are they now? Oh, $20 billion. So, we're roughly up. We would have been roughly up 10% if we were holding these guys. Shame. Let's look at some financial details. Price earnings ratio at the time then was 38.56. CubeSmart at the time was 43.21. CubeSmart was a little bit lower. Let me see what their market cap is now. Yeah, not as much of an increase as extra space, so we lost out there, I guess. They were about 7.9 billion when we last looked. National storage was 4.23 billion. They're here. They have fallen, have they? Maybe I've made a mistake. Am I looking at the wrong one? 4.23 billion. I must have made a mistake when I noted that down. Because national storage is not... TradingView is not always right with it though. So maybe that's a mistake. And public storage to finish off. 49 billion on TradingView. We were looking at 44 billion. So they're roughly 10% higher too. Cube's been a slow one, unfortunately. In terms of price earnings ratios, the highest was national storage. They're the PE of around 84. Lowest was public storage. They had a PE of about 40 on that point. And just for context, you got CubeSmart at 43.21 back when we last looked. Life storage at 45.94. CubeSmart's roughly 6-7% higher. Life storage and public storage are about 10% higher. So translate that through to the price earnings ratios. And you'll kind of see it's a little bit more expensive relatively now. UVXY. You've never seen a chart like this. No need to apologize. Welcome. This is how I like to look across multiple different sectors in multiple different nations. I'm based in London, England myself, but when I make an investment decision, I don't stick to one specific area because my main niche is equities, stocks, so it doesn't matter. Normally, I don't like to go into every market for the sake of it, but there are a couple main focuses I like. Emerging markets, specifically Chinese equities, US-based stocks. My main area that I like to kind of focus in is mid to large caps, the folks that can go from $1 billion or a couple billion to tens of billions, maybe hundreds of billions. And in the UK, generally, I just like most of our companies that are quite liquid to keep some tabs on. So look at this chart. You see, if I'm looking at this time frame, when we made a high here on CubeSmart, 42.47 was the high. Most others made highs, but who's made higher highs? Actually, I should probably be reviewing our position here because national storage made higher highs, public storage made higher highs, live storage made higher highs, and I think even extra space is quite healthy in terms of that. The only one that doesn't stand out is CubeSmart. We need to close probably tomorrow's session above that high. Otherwise, it's probably revisiting 39 or so ASAP. If I got a second, what are my thoughts on UVXY? Yeah, sure, let's have a look. Whoosh. Alrighty. Someone's having a rock concert upstairs. UVXY. What is that? Ultra VIX short-term futures ETF. Makes sense why it's down, because that's the volatility ETF. No, sorry, volatility index. Short-term future ETF. Okay. Well, it makes sense why it had this spike during the COVID crisis. Look at that, though. 23 to 135. What? That's crazy. Well, with this kind of ETF, going into what we're going into, which is the mother of all bull markets, in my opinion at least, this kind of ETF tends towards zero. So any point you're buying in, your cost basis is drastically going to reduce. You can see here, look, the bounce of roughly 50% was followed by a decline of more than 80 or 90% in value. So the odds are stacked against you coming out of a crisis, going long in something that will only ever deliver amazing returns in a crisis. Your payoff essentially here is what, 50% or maybe a loss of 80 to 90%, which is guaranteed, and every day you're kind of losing and losing and losing and losing. So with this kind of portfolio, I'd wonder how it's structured. I'd be very curious to see exactly how they structure it before I do anything. In terms of price targets though, this is not one that I'd like to chart. And the reason why is it's more related to macro activity. If markets are doing badly, this is something that you're going to be bullish on, and it happens very quickly. It's not something you can trade unless you have an underlying reason behind it. Yes, there's been a little bounce here, and we're going into bearish seasonality because May's coming up. It's probably, in my opinion, going to test around 650. So if you are trading it, break above 480, targets 560, break above 560, targets around 630. Those are the moves I take. But once again, if that happens, you got to be quick on it, because it will tend towards zero again and again and again. Normally, these kind of ETFs or structured instruments, you'd be buying if you think the crisis is going to happen, and we haven't had a crisis in a while. Goodness me, I'd be surprised. How long has it been around? Oh my. Well, yeah, that's exactly my point. This ETF could be priced at 0.15 in 3 years' time if we continue to have the bull market we've been having since the COVID recovery. After the COVID recovery to now, we've actually entered a bull market, and we have natural corrections, and those can have this bounce. But look at that chart. That is ugly. My bad. Hendrik, I thought you were talking about the 5 instrument chart we had here, but look at that. Oof. Musa, I think I'm saying your name right. I could be saying that wrong, but Mu53Y, Su8N3T. I know it's like in the Middle East we use 8 and 3 a lot, and 5 to say certain things. But yes, appreciate you following, by the way. Thank you so much. Premium users as well. Big up TradingView. We love this platform. Appreciate everybody following Hendrik as well. We're just getting random follows over the place. Appreciate you guys. And if you want to stay... if you want to stay up to date with what I'm doing, do give me a follow on Twitter. Would appreciate that. Let me go to my profile. This is me. All in a suit energy. Let's share it out. Because we're going to be putting that weekly stock chart, kind of stock report, with some trade ideas We're going to put it once a week. And you wouldn't want to miss the highlights for that. We've got people waiting to be involved in that, which is super cool. And I'm going to be also sending a bonus kind of email report where I just send my thoughts on a couple stocks, a little bit of financial data on the page, couple images, couple graphs, my targets, my points. So I want to buy Twitter very soon. Twitter is probably going to be the first company I talk about in that written series, and I will release them before I release them anywhere else. So as I do it on Twitter, there's always a delayed response because Twitter isn't where I work. Twitter isn't a business of mine kind of thing, so it's not the most important priority. Whenever I sit down, I want to think about it, write down kind of thing. So that's what we're going to do. We also produce a lot of free content, written articles, all that, videos. When I ever realized how technical analysis works, well, I've made 20 plus videos talking about everything, moving averages, all that. That's all free. You click on the Quantum Research YouTube channel, you can check that out. And that itself is content that normally people pay thousands and thousands to access, but it's all free because I think that information should be free. That is something that everyone should be entitled to. Risk management principles. But anyways, what am I missing in the chat? Something's popped up. Do you work sometimes with Fibonacci? Hendrik, with our report, the stock report that will be coming out once a week from a week's time, if you keep following my page on Twitter, you'll see that the majority of those targets will be put in terms of fib. I think fib is something quite quality. Very few can do it right, so if you do it right, it should be something that's more on the exclusive side of content. So that is going to be involved on the QR side. In fact, let me type the Twitter account, and I want to type the Instagram too, because if you use Instagram, Quantum Research has an Instagram that is active 3 times a day. Super cool. We put the highest risers, highest fallers, everything. In fact, we've been gaining followers like crazy. Look at that. Boom. All of these. How does a PE ratio work? All that information. 126 likes as well. This was very popular. And we gave some info up to date. Highest risers, highest fallers. Look at that. Boom. PHE was in one of these. If Hendrik's still around. Well, Facebook, all that stuff. Couple of our thoughts, little mini slide deck with the chart. Boom, some financial info, some opinions, events coming up, articles, all of that. And this is just the free information. So yeah, 344 followers. We looking nice. We looking nice. Very nice. But in terms of like lives and stuff, I stick to MAs normally. Just to kind of give a grasp of the trend and how things are looking. Another important one. Flutter. Breaking down. Fundamentally, I like it versus the likes of DraftKings. What are you talking? 26 billion valuations. DKNG is nowhere near the level that Flutter is, and it's worth. Is it DraftKings or is it another company I'm thinking of? Maybe DraftKings have fallen since where I was looking at it. 73 to 56. Yeah, okay. Well, if you're paying the same price for these companies, one of them is the one that owns PokerStars and all of the UK's betting network, in my opinion. Beyond what Entain owns, Paddy Power, Betfair, all that, is Flutter. William Hill is Entain, I believe. DraftKings is just weak, in my opinion. Probably target 50 ASAP. Could even put my money where my mouth is and go short on those guys. So I'm interested. Can you share the YouTube channel? Yeah, sure. I'll share it right now. About what we do, it's not what is publicly available because we're getting, obviously, I'm not the only person who works at Quantum Research. We have a team. There will be not only my thoughts, Ryan's stock talk, but we'll have the stock report as well. My part's just stock talk with Ryan Kia, because that's me. And that's more fundamental ideas, long-term investments. I make investments on a regular because I work for a public company. Where do I put my income? Into investments and trades. That's where my origins were. So all of this stuff is casual. And it means you can create value plus make investments on the side as well. Quantium research is a way where we can put straight up information for investors, by investors, for traders, by traders. If you don't know any of that stuff, best know you're not a part of the Quantium research team, but know that that information will be provided to those who need it. Yeah, and we keep what's free for those who can't afford to pay for that stuff, because when I started I couldn't. But I subscribe to a couple Substacks, a couple newsletters myself. Love to support the community and also pay for what information really helps me sometimes think about some quality new ideas. For example, one of the ones I've been trying to get signed up to, but it's not, unfortunately, it's not been on the road as regularly as the guy wanted. Teddy Okiyama's I think it's called the Mother's Index newsletter. I was willing to pay for it when he was about to launch it, but I think he's stopped, which is a little unfortunate. It's about Japanese equities, new area to me, and it means I can get an allocation in that kind of thing too. But yeah, that's what we do. We'll be tweeting about that on Twitter. A couple people have DM'd us asking. It's not out yet, but it will be soon. A week, give it a week, yeah. But anyways, let's look at a couple of ideas. I wanted to flip through 2 or 3 ideas that I had before I switch over to that kind of content in the future, moving forward. I want to be using that kind of stock talk section as well to talk about every investment I hold, why I'm holding, where my targets are. Because some of these investments, for example, CubeSmart, someone probably wonders why I'm holding it. There's so much information, I probably wouldn't be able to explain it now. I had to actually go to my notes. In fact, there's a lot of info. For example, 496 institutional holders hold these guys, 1253 hold public storage. My thoughts are CubeSmart's got a tighter holding, but it's more vulnerable to do a shift as well. But for me, I took the positive side of that argument. In terms of PEs, what are we looking at? I think I just mentioned, so there's no need. Revenue growth, CubeSmart is essentially the fintech equivalent of a banking stock. It's one that's growing, but it's not a banking stock, it's a storage stock. Couple interesting points from the quant side. Numbers as well. 2021 sales expectation $725.3 million, and net income is expected to go up 30%, way higher than the revenue growth. So they're holding higher revenue growth, maintaining it, and improving margins at a faster rate. Positive, and they're doing that better than anyone in the industry. One reason why I like the innovators, the fast people, over anyone else. Yeah, that YouTube channel, all the videos there are free. You got links to podcasts where I talk about simple stuff like options as a whole, what happened with GameStop, AMC, Fubo TV, and COS as a couple of examples. Also, live trading videos, where the other day I think we released one. I'd been quite inactive on this front because I got quite occupied with the shift to my new job, but because we're working on some cool stuff there as well. We had a trade on Standard Chartered that I posted the other day. It seems to be doing well. 845 views. Wow. That is nice. Look at that. Boom, boom, pow. We net some money. Nice. It's not normally this simple, but it was a good day, I guess. Take that with a pinch of salt. Yeah, well, appreciate everybody following us. What other info? I wanted to go through a couple companies. Let me just check if we've got enough people here to share this info. All right, cool. Let me see. Couple names I want to flip on. Where are we? JD, my beloved. Or should I say buy and holds beloved, because a friend of ours on Twitter has a love for this business. Let's talk about some of the numbers. JD US listing is what we're going to look at. What more notes can we get? Put that in dollars. This business is crazy. In 2020, they did 108 billion US dollars worth of sales, right? In 2021, that's expected to increase by roughly 35% to 136 billion US dollars. 146 billion US dollars of sales in 2021 is what they're expected to do. 2020, they made a profit of $1.65 billion, right? This increases all the way to $2.8 billion in 2020. That's the expectation, the forecast. The year after, they expect to make a net profit of around 4.18 billion US dollars. Now that rate of growth of profitability is amazing. The fact that their revenues are growing as well is great. It is expected to slow down in terms of percentages in 2022. Revenue would be around 177 billion US dollars. But note that their current market cap, if we can pull up on TradingView, because I don't have the up-to-date stuff, 102 billion US dollars. So they're roughly 1.5 forward sales. It's not a great multiple to use, but that is interesting to say the least. In terms of price to earnings ratios, right now they're quite expensive, but 100 something times, roughly 100 times earnings, just a little bit under actually, because they're at 102 billion market cap, I believe. So roughly 100 times price earnings ratio. That's expected to go to just below 40x in 2021 for the full year of 2021. 2022 under 30, around Alibaba levels. Well, Alibaba's expectation for 2021 has them at 28x. That's what JD will be if you look at the current market valuation now and the expected profit level in 2022, which is tough because they have to keep up all the growth expectations. Any bottleneck that hits their growth means that these forecasts are totally poof. They're useless numbers for any analysis. But fundamentally, I can see a case where JD is a business worth 350 billion US dollars, 400 billion US dollars. The numbers are too complicated to go into, and there are some elements of my system that I can't make public just because of some principles. But that's roughly 3.5 times higher than the current share price at 250% net return. 3.5 times higher than now is roughly $200. $200 in about 2022, 2023 is probably what I see on these guys. So in terms of the technical side, it's not too positive. Breaking down below important areas of momentum. 200-day moving average failing time and time again. If it doesn't get back above 78.50 real quick, and more specifically 88 really, then it's probably going down to around 56, 61. This is rising this point, but 56 is the point of this midpoint and the breakout as well. Kind of pennant style formation. That is why I'd want between 56 and 61. Yes, it could go much lower. It could go all the way to what, 45, but I'd set a 30% stop loss. So really 40 and below I cut. Yes, that loses me around 35%. But if I'm right and I hold for roughly 2 years from now, not even that really, 1.5, let's say, but I would say 2 to be safe, I could probably catch it on a serious move up towards 200. You do a discounted cash flow model, nothing but positive results come back here, and the terminal value you set in doesn't even need to be that high. Profit growth right now is roughly doubling versus the previous year. I like that. I do. And there's no other business in the space that performs like JD do. In fact, let's look at JD versus Pinduoduo. Let's look at Alibaba. Pinduoduo financials. Doubling revenue. Wow. Year on year. It's amazing. But they don't even have a tenth of JD's revenue. They don't even have a tenth of Alibaba's revenue, which is less than JD's. Pinduoduo is worth more than JD, interestingly enough. Pinduoduo's revenue is expected to double next year to 16 billion, or double in 2021 to 16 billion for the year of 2021. Nice, but they're expected to lose almost 500 million US dollars. Let's have a look at Pinduoduo's chart. approaching its 200-day moving average, I believe. Yep. Well, that's the weekly. If it can't hold this, there's some serious crash ahead. In fact, it's a perfect short candidate on failure of its ability to deliver on operational targets. It's not expected to make a profit until 2022, and will it, with the way they sell things cheap and just try and undercut any competitors? Well, how long can you guys live for? Yes, you have a high market cap of, what are we talking? 167 billion US dollars. More than 60% higher than JD. That makes me sick to even think of that. I couldn't sleep at night holding Pinduoduo at all. Cash flow, nothing positive at all. The only way they have positive cash flow is either from raises or borrowings, because they don't make money. If you're a shareholder there, just look forward to further dilution, if anything. But anyways, Baba, that's a good company there. Let's have a look at Baba, Alibaba. Alibaba. Let's switch to dollars, as we always do. Alibaba for 2021 is expected to do revenue of 109 billion US dollars. That's up from 73 billion in 2020. Good growth, but JD sells more than Alibaba does on an aggregate basis. In terms of net profits, though, in 2021, Alibaba is expected to make roughly 10 times the net profit figure that JD is expected to make, which is crazy. $28 billion of net profit. Huge margins for these guys. And that enables them to trade at such a cheap price to earnings ratio. But their growth is slowing down a little bit, considering they're getting so large. 600 billion or so market cap, I think. Let's see. 626 billion US dollars market cap. In terms of the trend, it's failing. We closed the other day on the same reversal, but I don't think this is something that is going to perform well. I'd rather take a pairs trade on its competitors. Short Baba in terms of fair valuation. The whole sector maybe gets cheaper. JD eventually buy on a dip. I don't know exactly what my plan would be, but I want to have JD in my long-term portfolio. More inclined there over Baba. Pinduoduo is something that if they fail to meet operational targets, I'd probably go short aggressively. The pairs trade would be long JD, short Pinduoduo accordingly. Growth metrics can only last for so long. Same with JD, but at least I'd be taking the one that's getting the right type of growth, profitability. So that concludes everything we talked about for this session. I don't know when we're going to be back. I just had 2 hours of free time. I could have sat down and watched some TV, but I like the markets more. And I'm going to casually go and look at some other ideas and see where we can go from there. I'll catch you guys all back on Twitter. In the meantime, I'm on Twitter at RyanKier2. I'm going to put my Twitter there just in case you want to give us a little follow. We are looking forward to chatting with you guys more. Nice. Everybody's having a good weekend, man. So live your investments. I like that too. I love all of this. We've got such a cool community over here, man. Shout out to Connor, one of my favorite people in the community. What a guy. Oh, I didn't realize he followed me. Super legend. Mark's cool as well. Sahil Bloom, one of the best storytellers on Twitter. This is a community of everyone. I see you putting the price bar back and forth. Double click on it. What do you mean? What's the... Yeah, I know you mean this. Yeah, this does make it look so much better. But I don't know why I'm so much satisfied when I'm looking at everything in action. Because otherwise I get rid of these. I'm just stuck to one. I kind of like to have context behind everything. Also, this graph, I should get rid of it, this comparison. But it was something from a while back. I don't like that as much as this. But anyways, been a pleasure, guys. I'm going to go probably cook up some eggs. Cook up some broccoli. I don't even know, something healthy. Because that's what it's all about. Healthy mind, healthy body. Or at least a healthy mind for now. Hendrik, appreciate you coming through. Appreciate MOU53YSU893T. I don't want to guess, but you must have a cool name. King Cairo, everybody, appreciate you. If anyone was watching on YouTube, sorry if I didn't check the comment section. I don't normally check the stuff there. We kind of have it as a log. Let's double check. Yeah, sorry about that. But we are going to chill for the rest of the week. Appreciate all of you guys. Hope you have a wonderful, wonderful, wonderful weekend. And I'll see you all very soon.